SoFi stock is crashing. We're down over 10% at this point, maybe even 13% by the time we look at it. What are you going to do if you are a SoFi stock holder? Well, I'll tell you one thing. We have had exit signals and it is flashing big red lights that you need to be aware of. So let's take a look at SoFi stock right now over in the market. So we jump over to SoFi and we can see, oof, SoFi is looking terrible, absolutely horrible, no good, very bad. From the high, the close on the high to right now, down 13.5%. Now, Joe, I see some big red flags here that could have helped somebody who was owning SoFi stock get out. Can you list off a couple of those red flags?
The first one that jumps out at me, Chris, is the order block. This big blue rectangle at the top of the ticker, the candles here. If you're going to get into one of those, you know you're going to have some resistance to that price increasing. So there's a lot of times where you're going to bounce off that order block, and it's going to keep going down from there. And then you're kind of just hoping that it's going to come back up. You don't see any rectangles under here showing support, so you don't know
Mm,
where this is going to start crossing.
that's actually a really fair point. We don't see any support order blocks underneath it. You know, a couple things that I see right here is the 10 period EMA and the 20 period EMA. Not only have they been violated, but they have been decimated, right? We're seeing multiple closes underneath the 10, which is your short term, and the 20, which is your intermediate term. Now, we're not quite in a bullish trend just yet, but it looks like we could be awful close. Now, it's funny because SoFi bros will tell you SoFi can't go down. SoFi can't go down. And we discussed yesterday the 50-80 rule, that 50% of the time a stock like this can go down by 80%. And 80% of the time a stock like this can go down 50%. And lo and behold, when you measure this right here, it went down 52%. So SoFi bros, I'm telling you right now, you don't have to hold it when it's going down. You want to be buying stocks as they're crashing up, like it did right here, not as it's crashing down. And it reminds me of what I like to call the market cycle. So I wanted to pull up this slide real quick and let's talk about this. So the market cycle represents areas where people are excited, scared, greedy, fearful. And this is exactly what I see on SoFi, right? We saw this happen back late last year and then through the middle of 2025. And now it had a big, beautiful stage two uptrend right here, which is exactly what you want. You want these stage two uptrends. But when we hit the tops up here, this is when moving averages start crossing back over. Now, we haven't had that crossover just yet, but it looks very likely in the next day or two, unless price just reverses back up and goes crazy, that moving average crossover is going to happen. So, what I'm trying to tell you here is what you're seeing on the chart is not something unusual. This can happen to a stock. What is unusual is you understanding how the market works and you putting into place exit signals so you don't watch a big giant move up like this evaporate. Now, that a big giant move like this can't do that. A big giant move like this can evaporate, right? No way, Chris. That can't happen. Let's take a look at Tesla. Wild Bill says I follow the outlier sell signal on SoFi, took my profits and did not hold it while it's crashing down. Outstanding, Wild Bill. Thank you. I really appreciate that. Um, Joe, a lot of people will say that that is an impossibility, what I'm describing right here. If we look at Tesla, Tesla from October of 2024 went up 122%. And from December of 2024 back to March of 2025, 100% of that evaporated. Okay. So you can't tell me that this doesn't happen. It happens more times than you can think. Be defensive on SoFi. Be ready to move out. And I'm telling you right now, I would be moving out. We've got sell signals like Wild Bill was talking about back here on September 25th. The greed has fallen off on SoFi so hard. The whole sector, the financial sector, is looking weak AF. I would not own SoFi with your money. That's how strongly I feel about staying away from SoFi stock. But there's lots of channels out there like this one here, Future Investing, that are super bullish on SoFi. And I'd like to hear what he has to say. Maybe he's got a great bull case that we can all learn from. What do you think, Joe? Should we listen to this?
Yeah, let's give it a shot. Let's see what his opinion is.
Let's see. Let's see the bull case here on SoFi.
Guys, a lot has happened for SoFi in the last few days, going from $31+ a share all the way down to in the $25 ranges. I want to talk to you guys about why I bought this dip, the confusion.
Ooh, I appreciate the timestamp. September 30th. So that was yesterday. Joe, tell me why you wouldn't want to buy a dip.
Because we're trying to find a trend going up, not a crash down. And you're under the 10, you're under the 20, you're headed for the 50. That's not a trend up.
No, certainly not. And let's go look at AMD. I love picking on AMD because for months I saw the same thing over and over and over. Receipts are on YouTube where people are saying, you've got to buy AMD, you've got to buy AMD. I saw so many you've got to buy AMD videos as it was crashing down from 140, 130, 120, 110, 100, 90, 80, 70. And the reason you don't want to do that is you don't know how long it will be dipping. Now, eventually, AMD did come back, right? And big moves like this are very, very, very rare, like ultra rare. So if you did buy AMD all the way down, you managed to come back out on the positive side, which is great. But you also had to hold it for months at a time. Let's say you bought it right here around 130. That was in December. You finally got to break even in June. Joe, I got 7 months that I'm sitting here on my money, not doing a damn thing for me before it finally gets to break even. That's not how trading's supposed to go. And I bet you're probably saying, not you, Joe, but those watching, those normal people, not outliers, watching this saying, you know what? That's fine. I'll just average down. Joe, you know what's crazy is that if you decide to average down all the way down here, would you believe, now this is going to blow your mind, would you believe that if you bought it here, here, and here, you would have the same average price as if you bought it here, here, and here?
Yeah. And those other channels don't tell you that. Wait till it's going up, folks.
Dude, legitimately, they try and sell you the dream if you're buying a stock at the very best possible price. I'm here to tell you, you use the trend template, the 10 over the 20, price over the 50. It'll tell you when prices are going up. The only time you're going to get paid is when prices are going up. Fact, period, full stop. And you try to tell me, because I've seen it in the comments, which I like to bring it up, that it's okay, I average down. Well, daggum, how about you average up and be to profits that much faster? Be to profits that much. It's just not so fun to buy it on the way up, Joe. It's scary to buy it on the way up. I like to watch my money evaporate. In 7 months, you could have traded DDOG. Exactly. All kinds of other things you could have traded. So let's go back to this video here. I highly, highly, highly discourage buying dips because we don't know how far down the dips will go.
That happened in the markets and why Wall Street is completely wrong about SoFi. As you can see, SoFi in these last...
Oh, man. I don't want to... I really am disappointed. I didn't want to make this a critical video, but here's the thing. The market's going to tell you what's going on. You are not allowed, anybody watching this live stream, replay, you are not allowed to ever say the market's wrong. The market will bitch slap you into Thursday because it is always right. I might have to rage. I wasn't planning on raging. The market will slap you into Thursday because the market is always right. Your job is to just go with the wave up or out of the way on the way down. Yeah, the market is wrong. Yeah, we'll see about that.
2 days between September 28th all the way through September 30th, SoFi ended up falling quite a lot, going from $28 a share down into the $25 ranges. Massive sell-offs at the beginning of the days. This is where the sort of situation is starting to occur. This happened for Upstart as well, being even larger of drops over the last 2 days. Pagaya, another lender, lending club, also dropping over those last 2 days. What is happening across American lending fintechs that made them drop so much? Well, this report ended up getting released from one of the Wall Street analysts that cover Upstart, BTIG, that ended up covering this. Said August data from Upstart's ABS securities show accelerating delinquencies in both the months of July and August.
Which I'm not super surprised by at all, not in the least. And that's one of the things, right? If you are in the banking sector, I was in the banking sector for 12 years, you've got to have loan loss provisions because this will happen, right? And, oh, Joe, I have a great story. There was one credit union in Atlanta that they basically were giving loans to anybody with a pulse. If you walked in and you're like, yo, I need to buy a new car, bro, they'd be like, all right, cool. Or if you walked in a nice suit and tie, you'd be like, oh, yes, I'm a very established, fine gentleman. I would like a new car. They'd be like, yeah, sure, go for it, right? Didn't matter. They gave loans to everybody. By the time I saw them, they were in trouble. And because of that, they had more than 10%, 10% of all of their loans were delinquent. For perspective, you got a big problem when 1% is delinquent.
Ooh.
Yeah.
Ouch.
Oh, it was a huge problem. They're gone now. That credit union doesn't exist anymore. But delinquencies rising is one of the worst things that you can possibly happen, right? Because I don't know if you guys know this, but banks and credit unions in the financial industry, they kind of leverage themselves based on the assumption that people will continue to pay their loans. When they stop paying their loans, we got some issues here.
We are candidly surprised by the rapid increase. August 30-plus day delinquencies across the trusts now exceed 11.2%, up from 10.4% in July, both of which are well above that 6 to 8% range. Those delinquencies have ranged at between October 2022 and May of 2025, which those are the normal ranges, 6 to 8% during those times.
The 6 to 8% range must be different for these type of companies because that is astronomically high.
Read that very well, but that's the case. SoFi ended up coming out and saying, as the CEO Anthony Noto has said on the Goldman Sachs Communacopia and Technology Conference on September 8th, credit is performing well, and we've seen no change there. So although Upstart is seeing these incredibly high increases in delinquencies that people should be worried about, many people saw, okay, this is a broad range across all of fintech. They must all be seeing these increase in defaults. SoFi adamantly defended themselves. Even in the Q2 earnings call, they said, turning to credit performance, the health of our consumer remains strong, and we're not seeing any signs of weakness. Any signs. So that was back in July. Okay. From what they're saying here, those defaults were starting to raise for Upstart in July and August. So maybe it's just Upstart alone. But guys, get this. They ended up publishing that report on August 29th. They came out this morning, okay, October 1st, and said August weighted average 30-day delinquencies exceeding 12 or 11.2% above that average range. Sorry, we've corrected that to reflect the 30-day average delinquencies actually being increased from 6.2% up from 6.1% in July and 5.4% in June. Okay, so June delinquencies were actually
It's almost like the job numbers. You can just make them up, apparently.
Way better than that 6 to 8% range. And then July and August were also 6.1 and 6.2%. Perfectly in that 6 to 8% range, which they had highlighted. So if I can go back here, billions and billions of dollars, billions left the market because of a single analyst communication to their like institutional investors that was just completely fraudulent. Or I shouldn't say fraudulent, but they were just wrong. They did the formulas wrong. They got bad data, and now they've corrected it. And so now stocks are starting to return. That's why you see all these spikes headed back up for Pagaya and Upstart.
Well, we'll have to see about that because SoFi is down another 3% today. Does that mean that SoFi is basically headed towards bankruptcy? I wouldn't say so. What I would say is that if you are an investor in SoFi, now's a great time to take profits. You don't have to hold it on the way down. And especially if we're having all kinds of error-based, error-prone type of information being leaked out there, it may not be the best time to be owning that stock, right? They're going to have earnings on November 5th, November 4th. By all means, if you're an investor, why not wait out until earnings and see if they actually can correct their data? I don't know. But for me, I certainly would not be buying it. So with that out of the way, I definitely wouldn't be owning SoFi at this point. I would be having a plan and I would be following that. Now it starts with not telling the market what to do, but actually listening to what the market is telling us. And we do that by looking at the, let's see the slide that I'm looking for. We do that on Plan M by looking at the bullish trend of the market and the buy signal of the market. So let's go over to SPY inside of OVTLYR. Now you can grab OVTLYR for just 82 cents a day when you get the annual pass. And you can see here the buy signal that came on August 7th. And the green overlay right there, it means the 10 is over the 20, price is over the 50. The OVTLYR trend template is bullish right now. So that's a great start. Plan M being one of our most profitable plans. 40% of the move is due to the market. So we got a bullish trend and we got a buy signal. And the fear and greed, what's going on with the fear and greed right there, Joe? It has come down and then continues to go down. It's at 70.02. We want to see the fear and greed level be at under 70 and rising. We're heading down at 70 right now. So the next thing we need to look at is the breadth of the market. We need all the spearmint gum to make the market breadth taste a little bit better, because it's getting worse and worse and worse and worse and worse. We're down at 24.05% of the market having buy signals. That's it. 24% of the market having buy signals. That means 3/4 of the market is sitting on sell signals right now. That's not brilliant. Not brilliant at all. And then the red line right there is the 10 EMA. Now, if we start to see a turnaround, that could cross over pretty quickly since it is so depressed right here. But one thing that also catches my eye, Joe, is down here and what we call the donkey channels and the outlier channels. We can see less and less uptrends, more and more downtrends. So let's take a step back. We've got falling fear and greed, right? Moving more towards greed or fear than greed. We've got a market that has less and less buy signals. We've got a market with more and more downtrends, less and less uptrends. Dude, we've got some conflicting market signals here. Joe, what do you think we should do if we have conflicting market signals?
Well, we may want to look into a different plan because it doesn't seem to be fitting here. We're not getting the signals to buy. We need to be looking for some other criteria to try to get in the market, or we just sit in cash and protect our money for when the market's ready.
Absolutely. Now, there are times to be aggressive in the market, and then there are times to be defensive in the market. And I am being defensive in the market with what we are calling Plan ETF. So Plan M and Plan A are excluded today because of how the market is acting. So we are now in Plan ETF. Plan ETF is paying bucks, my dude, right? Let's go over to Plan ETF and talk about it real quick. So Plan ETF is when we have an uptrend in the Qs. So let's go verify this real quick. Let's go verify that the Qs, which are hitting new all-time highs today, have a new uptrend. Look at that, brand new all-time highs today. Let's just double check and make sure it's trending upward. Oh yeah, it is. How about that? And we have a buy signal on the Qs, which we do have that in place. And the Q heat map when I entered was under 70. Today it's at 67.75, so it's still under 70. And it's less than 2 ATRs above the 20 EMA. So the ATR is the average true range. That gives you an idea of how volatile a stock is acting. And so it is currently still in, but really close to popping out of what I call the value zone. Now, I got in right here as it was pulling back into the value zone. And you know what? I'm up a couple bucks. I ain't mad about that. Just following the plan. And there are no order blocks on top of QQQ. There was one right here that's already ended. And that's what I've said before, is that when you see an order block that's under 30 days old, you can almost ignore it, right? It's not very strong because the people who are in at that point, they've only been in for 6 days. But if you see a long-term order block, 30 days or more, that's a different story. Those people are ready to get back out at break even if they have to. So if I were looking to get in today, I could totally see getting in today because we're right at the top of the value zone. And I bought tqqq a few days ago on September 25th, and it's doing well. Now, the question we have to ask ourselves is it time to get out, Joe? Well, we're looking for a sell signal, which we don't have. We just covered that. We need a bearish cross 10 on the 20 on the Qs to get out, which we don't have that. And we don't have any order blocks in the way. So, Joe, when you don't have any exit signals, what do you do?
You just sit and wait, and you keep watching for those exit signals day after day. When they hit, you take your exit.
That's right. And in the meantime, the money is made in waiting. The money is not made in being active. The money is made in waiting for your entry and exit signals. So what I want to do now is shift gears, and I want you to put in the chat some stocks that you own, and I want to give you my perspective on them, right? Good, bad, or indifferent. I would love to hear from you. So put a hashtag S and then the name of your stock and where you got in the stock at. That makes life so much easier for me. Like Corey did right here. He is long the Intel. Let's go to Intel. 25 calls. Looks like Leaps 2027. And he entered on September 15th. All right, let's go to September 15th. So September 15th was right here. So before this big gap up, in fact, let's go into OVTLYR because I think it's got a buy signal at some point. Let's see. Yeah. Okay. So actually, Corey, you entered on like right at the edge of that sell signal right there from the buy to the sell. And then a new buy signal came in right after the big gap up. And this is an interesting one, Joe. I've watched this a little bit, and this did both a gap and crap and a gap and go. It came down, it went under the big gap candle, which is usually a really bad sign. But then it turned around and it's continued up higher and higher and higher. And now we're up. How much are we up? 21% from that big gap candle, and from where Corey got in, up 43%. Those big moves do not happen often. So Corey, this is a big, beautiful, lovely move. Let's take a look at Intel over here. We have the buy signal still in place, getting more and more greedy. It's at 98 on the greed scale though, Corey. That gives me some concern. The higher this gets, the more likely it is to snap back. And the same with as low as it gets, more likely it is to snap back. So I would be watching this one like a hawk, especially at 98. The tech sector, it's not helping you out at all. And then market breadth is not quite there. So at this point, I wouldn't be entering it, but I would be looking to keep my profits by figuring out where I'm going to exit. So Corey, as long as you got that exit plan in place, looks great, my friend. Of course, put hashtag S in the chat and let's look at another one. Brian wants to look at AES. So AES, he got in on, it looks like he got in on September 30th. Let's go to AES. Woo, look at that big gap up, AES. And let's see, he got in on September 30th. That was yesterday. Buy signal came through on, what day was that? September 25th. Dude, it's 8 of 9. Look at that. You don't see that very often. 8 of 9 on Outlier 9. If breadth were there, this would be golden. This would be golden. But its breadth isn't there. However, everything else is set up on AES. So let's go look at the chart. And goodness gravy. Who would have seen that coming? Wait. When did the buy signal come? September 25th. Right here. Right there. And then spam. What happened here? Do we have earnings or something? Highest price since November. Potential $38 billion acquisition by a firm owned by BlackRock. Okay, very cool, Brian. Outstanding. How exciting that is. Now at this point, you really need to be asking yourself a couple questions. First, if this deal does not materialize, that stock price is going to plummet right back to where it came from. So be very, very on top of this. Second, if you are following the 10 EMA or 20 EMA, it's going to take it several days to catch up. It's going to take it several days to catch up. What I would do in this case is I would follow the gap and go rules. I would follow the gap and go rules. Now, we just saw an Intel where it had a fake out and then went. But let's look at Google for an example of what a gap and go looks like. A gap up and then go. That's what you want to see. So if you see the same thing in AES, that's where you want to be. You've got plenty of room up to this order block right here. So just watch this area. If it closes underneath the low of this candle, the wick of that candle, that's where Chris would definitely be looking to get out. But congratulations on that one, Brian. That's awesome. Congratulations to you. Let's look at the Tactical Gamer. Entered SMCI a few days ago at 43. Here we go. SMCI is moving up bigly. All right. So let's go look at SMCI over here. And all right, SMCI's buy signal came on September 19th. September 19th is when the buy signal came. Let's see, that was right here. And man, is it paying? Is it paying? Y'all have found some great stocks out there. Congratulations to you guys. The Tactical Gamer is up 12.5%. If he's long calls, that's even way more better. So congratulations to you. Let's take a look over here. It's getting less and less fearful. The tech sector is not helping you out, but it looks like it popped through this order block that was underneath it right there, where it is today. You've got a bit of room, 51 to 55. If it hits this order block right here, that is a pretty old, big order block right there. In fact, let's measure how old that one is real quick. If it runs into this order block right here, that is 226 days old. Without a doubt, I would be closing it. Without a doubt, because people who are holding it all the way back from February are just screaming to get out at break even right there. So take a look at that and watch it. Be sure you keep track of it. So we're going to move next to some new stock ideas. So put in the chat a hashtag S with the name of the ticker that you, I'm sorry, put hashtag in with the name of the ticker that you want to take a look at. And we'll continue to do so. I'll run the screener, in fact, over here in OVTLYR and see if anything new pops up. And while we do that, you can get into OVTLYR for just 82 cents a day. You head over to OVTLYR.com, grab the annual pass for just 82 cents a day, and you'll have access to everything on here, as well as access to the invitation-only live streams. And look, we're giving you all these entry signals. Probably would help you if you had some of the exit signals to go along with them. Let's take a look at Zscaler. So Zscaler, first one on the board right here. Let's see, Zscaler. So this has a 6 of 9 buy signal right here. It looks like that order block. What's that? ZS type. ZS. Yeah, it looks like that order block exists in OVTLYR. Where's it at? Zscaler here. But it doesn't exist on TradingView. So just keep that in mind as you are trading. There might be a hidden area of resistance right up here. But other than that, I mean, the tech sector is not helping you at all. You got the bullish trend, you got the buy signal. It's getting more greedy. Zscaler looking pretty sharp right here, looking pretty sharp. Again, if it hits up around 325 or so, 326, I'll be looking to exit as fast as I possibly can. Let's go to the next one here. Now, again, I'm not taking any trades today because it doesn't fit my plan. And you need to get to the point where you act like a professional fund manager as well. And if it doesn't fit your plan, don't have FOMO, have a plan and follow that plan to a T. Looking at the next one here, this is FlyW. What is FlyW? Flywire Corporation. Okay, I don't know anything about it, but I do know that it is it has a buy signal. Signal returns, actually, I want to look at that. 37.5, whereas buy and hold is down 38%. That's pretty cool. So this is also in the tech sector, not helping you out. But the stock itself, the trend, signal, fear and greed, and outlier blocks are all working in your favor. And let's go to one more. Let's go to DataDog. Somebody mentioned DataDog in the chat. Let's go look at DataDog right now. This is one where Joe and I made tons of money in May. Let's look at it today. Buy signal, also in the tech sector. The trend, signal, fear and greed, and order blocks. Let's see how much room it does have over here. DDOG. Order blocks are going to be a problem on this one. Order blocks are definitely going to be a problem. From December last year, it's running into those. So it's a couple days behind on. Oh, that's SMCI. A couple days behind, it looks like, on this one right here, because today it's moving right up into that area. So you need to be aware of that order block right here. This is actually one that I would not touch because of that, but it did have a buy signal September 29th, which was right here, and it blew through this order block right up to there. So not a bad signal at all. Let's take a look at some of your suggestions in the chat. The Tactical Gamer wants to look at APLD. I'm picking on him today. Let's take a look at APLD. Let's take a look at this one here. So you got a buy signal on, what's this date? September 17th. Looks like it's moving up pretty well. Again, another tech stock, not looking so hot in that sector, but one that seems to be outperforming the sector, getting more and more greedy. Let's go look at the chart real quick. APLD. Ooh. Oh, man. I'm conflicted on this one, Joe. If it can close above this, that ends the order block and it gives you some support. But then you got another one right smack dab in the face. How much room do we have right here? Oh, but you know what? It's 11% away. You can make tons of money when the stock goes up 11% before it hits that order block. I love it, actually. I love it. And in fact, you want to make sure that it closes over this. So roughly 24.92-ish. It's just underneath that. If it closes up over that, that could turn into wonderful support as it pushes up into the 28, 27-ish dollar area. So that one looks great. I love that one.
Yeah, that's a good one. If you buy contracts on that and you take your signals because your planner's telling you to, you could have some really nice gains on that.
Yeah, before it hits the order block, you could totally make some really good money on that. Let's look at Duolingo. DUOL. Stefan wants to look at Duolingo. Another tech stock. Oh man, Duolingo is so ugly. This is one we looked at a couple days ago. And I couldn't. DUOL. There's no possible way I'd be buying this one. Not at all. I mean, even though it has that buy signal, a buy signal within a downtrend should not be taken as a just go for it. It's more of a maybe it's an opportunity. maybe if you were short, this is the time to get out. But dude, there's no way I'm touching this one. No way I'm touching it. And then again, it's just really struggling to get through this 50 period moving average right here. And you know, this is one of those things that you got to keep in mind, right? You've got to understand a 10 over the 20 price over the 50 does not mean it will go to the moon. But if it does go to the moon, it'll have the 10 over 20 price over 50. And then this is what I mean by that, right? Every once in a while, you might make a buck or lose a buck. But by having the outlier trend template, which you can add to your chart, right? You can add to your chart for free on any platform. It tells you which direction the trend is going, right? So it had that crossover here on June 25th and went under the 50 by June 23rd, and then has gone down a ton since then. How much has it gone down? It's gone down 34% since then. And you can see the moving average is telling you which way it's growing, right? Now, again, when they cross over, you might make a buck or lose a buck, but the only time you're going to get paid big bucks is when you're on the right side of the trend. So Stefan, this is not one that I would buy. No way. I'd be staying far away from it. Hit the like button. I like that idea. Sean wants to look at Walmart. Now, Walmart is in the staple sector. And when the staple sector and utility sectors are doing well, that's bad for the market. Those are flight to safety stocks. However, the sector, it's not there. That's good for the market. That's actually good for the market. So the sector is getting more fearful. The breadth on the sector, still bearish. And it is still sitting in a buy signal with a bullish trend, fear and greed, order blocks, all working in its favor. Let's go to the Walmart chart real quick. And oh man, it's like fighting in between two order blocks right here, fighting in between on those, right? Now you can get access to the exact same charting software that I use. You can get a free TradingView account and you can use the free indicator that we have over in our Discord, and your charts will look exactly the same as mine. So that way you never feel left out in the cold. So Joe, listen, we covered a ton of stocks today. And if somebody were looking to save time, make money, and start winning with less risk, where do you think they should start?
Well, they could click one of these videos right here.
One of these videos?
Yeah.
That's covering our faces right now?
That's
That
right.
sounds like a brilliant idea, Joe. Thank you guys so much for coming, and we will definitely talk soon.